This week, the chief economist from Realtor.com, Danielle Hall, she came out and said that the housing market in 2023 is not going to fall as much as you guys think, and prices are even going to actually go up in many different areas. Now, we talked about this briefly in the last video about how some markets are going to see home prices appreciate even during a housing crash. So while this might sound insane, there is some legitimacy to this. However, when they come out and make these bold statements that are very bullish on the housing market going into 2023, as we are literally seeing home prices come down right before our eyes, I think they're being a little too optimistic. And what I mean is, out of the 100 largest metropolitan areas that Realtor.com tracks when it comes to the housing market data, they think that all of these areas are going to see at least 10% gains in home prices in 2023. Places like Grand Rapids, Michigan, Portland, Maine, Providence, Rhode Island, Spokane, Washington, and Worcester, Massachusetts. Maybe, who knows, guys? It will be interesting to revisit these type of predictions into next year to see if in fact they end up being right or if they were just completely wrong. Because I personally think that yes, there are going to be some markets that are going to weather this crash quite well and maybe even see a small price gain, while many other places are losing 20-30% equity. You know, is that possible? Absolutely. Anything is possible. Is it very likely? Not really, especially with all the headwinds our economy is facing right now when it comes to the recession and the mortgage interest rates and inflation still being far from under control right now. But first of all, let's acknowledge the elephant in the room. I think one of the main reasons why they come out with articles like this is because they want people to think that everything is fine, and don't worry guys, it's still going to be a really strong economy, it's still going to be a really strong market. There's nothing to worry about going into 2023. And that sentiment I completely disagree with. Could it end up being not as bad as we think it's going to be? Sure, but it could also end up being worse. So I think it's better to just be prepared for the worst. And maybe that's the old Boy Scout in me. I learned that at a very young age growing up. You know, it's better to prepare for the worst and hope for the best, and you'll be ready for anything. Man, I cannot walk anywhere without running into some kind of landscaper or construction or something to mess up the sound in my videos. The other reason why I think they could be way overly optimistic on this prediction is because even they say themselves in this article that they think that home inventory and new listings coming on the market are going to climb 23% into 2023. Now, if we just do some quick math off the top of my head, because I did not research this ahead of time, guys, if you look at the active listing count right now, which is roughly, let's say, 800,000 listings on the market in the US, if that goes up 23% next year, that's already going to put us at about roughly 1 million homes for sale at any given moment. And that's getting pretty close to pre-pandemic levels of housing inventory. So I think that we see pre-pandemic levels of housing inventory in 2023 combined with really high interest rates. It's very unlikely that most markets are going to see any type of increase next year. Most of them are probably going to be seeing declines. Another $11,000 a month rental like it's nothing. And to put this into perspective, they tried renting this place about 1.5 years ago for $4,500, couldn't get it rented. Good luck with that. And this Danielle Hall, she pretty much admits in the article that this is all going to hinge on what the Fed's going to do as well, and that these predictions could change if the Fed does not basically pivot in December, which I think is extremely low chance of that happening, because this whole prediction is based on a 50 basis point rate hike in December versus 75. Once again, guys, I think that they put out this information to try and paint the most optimistic picture possible for people and to try not to scare everyone away from the housing market, because after all, Realtor.com has a giant incentive to keep real estate selling and to keep buyers out there looking and paying the price no matter what the cost is. So I wanted to start the video with that, and don't get this story or this information confused with my personal views on things. I do think the overall housing market is going to see a decline. We're already seeing it from the peak of June this year till now, guys, the housing prices are down roughly 8%. The year's not even over yet, and I don't see this trend stopping anytime soon. I think you're going to see that at least for the next 6 to 8 months, if not longer, and it all hinges on how bad the recession gets combined with the Fed interest rate hikes. But there is yet another factor to consider, and that can definitely change the game. Our good old friend, government intervention, guys. And I know how much you guys hate it because you've told me how much you hate it in the comments. But we have to acknowledge what's happening out there, and whether we like it or not, the government is involved in pretty much every aspect of housing, including keeping very expensive housing affordable. What do I mean by that? Well, let's look at this. In 2023, Fannie Mae and Freddie Mac are going to continue to prop up the housing market, particularly when it comes to the more expensive housing markets, okay? And how are they going to do this, you might ask? Well, basically through mortgage-backed securities. How are they going to do this is by raising the limit on the loan amount that Freddie Mac and Fannie Mae will purchase in 2023. So in the most expensive areas of the country, the loan limits will rise to $1,089,300. And right now, the maximum loan limit that these agencies will purchase is $970,800. So you might say, well, that's not a huge deal. That's only $90,000 more. No, guys, it is a big deal because they are going to continue buying mortgage-backed securities at higher amounts than they are this year, which helps these very expensive markets essentially stay afloat and stay in business. You know, think of these very expensive markets in California and New York, even some of them here in South Florida, you know, very exclusive markets that are pushing the $1 million mark right now. We see all these type of homes here in Miami pushing these numbers as well. So how does this help, guys? Because if these agencies did not raise their limits, then it would force people who want to buy in these more expensive markets to get more expensive home loans, because what makes these loans so cheap is the fact that Fannie Mae and Freddie Mac are going to be there to buy these mortgage-backed securities, and the bank can therefore offer a lower interest rate on those loans, versus when it's above these limits and it's too expensive, then you go into what's called a non-conforming loan. And you always are going to pay a higher interest rate on non-conforming loans, therefore making it less attractive to buy a property that expensive. So the government is essentially helping to subsidize even people who buy, you know, $1.2 million homes, guys. So think about that. Do you think that they should be doing this right now? Of course they shouldn't. They definitely should not be doing that. And that's one way that they can sort of delay this housing crash a little bit longer, or kick the can down the road, so to speak, like so many politicians do. And the other way that this works to subsidize these type of loans is that usually the closing costs on these type of loans are lower than what you would see on a jumbo loan, and a jumbo loan is anything over this loan amount. And on top of that, the interest rates are lower, as well as the fact that you can usually put a lower down payment. So once again, it fuels inflation, and it helps people who actually wouldn't actually be able to buy without these systems in place continue to buy, even in this insane market. So whether we like it or not, this is going to happen in 2023, and it's a very controversial issue, which it definitely should be given the situation here. Holy moly, this is Price Cut City. They bought this place for $825K back in 2017. Tried listing it this year for $3,250,000. Took a whopping $750,000 price cut. No takers. And of course, when they interview real estate agents and mortgage brokers about this, they say that the new Fannie and Freddie limits are needed in order to address affordability. Like, come on, guys. Who are you kidding? You think people who have this kind of money really need financial assistance, or they even deserve to have financial assistance? Probably not, you know? I think it's just kind of insane. And the fact that they're doing this is just going to prolong this housing affordability problem, if you ask me. So, yeah, are we all correct on the government makes things worse when they get involved? Absolutely, guys, and this is going to be the very first example of that going into 2023. But it's not just the federal government that's helping to make things worse. It's also all of us too, guys, or maybe some of us, not all of us. According to the most recent financial report from Adobe, they recorded that 197 million Americans did holiday shopping over this past Black Friday and Cyber Monday holiday shopping season, and that's a 10% increase over last year, and so is the amount that the average person spent. They're saying last year people spent on average about $301. This year it's up $325. But right away, when I hear that, I first think of, well, what about inflation? Because that's part of the big reason why people are spending more. It's not necessarily because people are richer or have more money and they're out there spending more because things are great. It's because things are more expensive, guys. And I have proof of this. Like every year for Black Friday, I buy a couple of hard drives for my computer to store all these videos on, so I have all the original copies and everything like that. And the hard drives I was buying last year on sale for Black Friday were like $89. Well, this year the sale price was $109. If you just take that one example, somebody like me who bought the same exact item this Black Friday versus last one, I had to spend $20 more on the same item. I know for sure from my own experience that this is mostly because of inflation that people are spending more this holiday season. And this is also reflected in the overall sales figures. They're saying that this past Cyber Monday was the best Cyber Monday ever when it came to sales, and it's up 5.8% year over year, totaling $11.3 billion in Cyber Monday sales. So I think most of this can be attributed to inflation, as well as people spending far beyond their means. We covered in an entire video a few days ago about how much credit card debt is up right now and how many people are spending money they don't have, utilizing buy now, pay later programs because they just don't have the money for things, and basically maxing out credit cards. And that also has a huge influence on this as well. You know, it's just like the housing market. They say, oh, you know, things are higher than ever, things are great. And why? Why is that, guys? You know, all of this government stimulus, even going into 2023, raising the limit on the loan amounts that the government's willing to buy for these mortgage-backed securities is stimulus, guys. It might not be direct stimulus, money in your pocket, but it is stimulus for people looking to buy in this price range, allowing them to get a lower down payment and a better interest rate versus if they were not doing this. So it definitely is a subsidy, but just indirectly, essentially. And I think this is very dangerous thinking and territory to get into, because this article goes on to say this, guys. They say the continued strength of the US consumer is nearly single-handedly staving off a recession right now, and Americans are still employed, they still have money in their bank accounts, and they're still spending that money. However, I think that's only half the truth. Yeah, they are spending that money, but it's not money in their bank accounts, it's money that they don't have. And that's part of the big lie that no one's talking about. And that's how we're able to have these record-breaking Cyber Mondays, because it's all fake, guys. If people did not have access to all this credit and able to spend far beyond what they make per year, this would never happen. Just like we would never see this run up in housing prices. But it's all fake, and it's all designed to make everything go up and pretty much make people poorer, is basically the conclusion that I'm coming to, because there's no way that this really helps anyone unless you own a lot of real estate and you own a business that can take advantage of all these high prices. So if you own real estate and you're a business owner, you're definitely doing pretty good right now. But because the Fed and the government don't seem to be aligned with the Fed's effort to curb inflation, this whole thing can all backfire, guys, because we had record-breaking Cyber Mondays, because we're going to see higher loan limits for Fannie and Freddie in 2023. This could be a huge signal for the Fed to continue with their rate hikes more aggressively into 2023, because all this says to them is inflation is going to continue to go up, because of all this artificial stimulus. And even all these economists that have traditionally been very bullish on the housing market, they're saying that this means that spending can't stay this strong for much longer. At some point, the pandemic era savings levy will break. That will take the wind out of consumer sales in a hurry. That's basically what economists are saying now about this situation. And that's of course going along with the lie that this money is actually coming from people's bank accounts as well. I think a month or two, we talked a little bit about the 3D printed homes that are going to be going up in Los Angeles for rent right now, and how to build one of those would be somewhere around like $220 or $230 a square foot. I forgot whatever it is. But a lot of people said in the comments of that video that why would you want to live in this, piece of crap, piece of plastic house? And I never really thought about it that way. Who knows what kind of chemicals they use to make the plastics that are involved in producing a house like that. And at the end of the day, maybe it's not so good to live in a place like that. However, there's another 3D printing home company in Tampa, and right now they're just a startup, and they're going to be selling their first 3D printed home. It's a 3-bedroom, 2-bathroom. The price is $600,000. Doesn't say the square foot of the house, so I don't know if that's a good deal or not. But one thing that's interesting about it is that this house is made entirely out of concrete, and it's printed by robotic arms that are said to be 95% more effective at building a concrete home when it comes to utilizing the materials and reducing waste than a human could do it. So not only are they far more efficient than humans in utilizing the materials, but also because of that efficiency, they're saying that this concrete home is 4 times stronger than a typical concrete home. And this is supposed to make the property 4 times more resistant to wind, water, termites, etc., which are all big problems that we have to face here in Florida. They're very optimistic on the future of this type of building, saying that right now it's an alternative way, but in the future it will be the only way. And maybe they got a point, guys, because if you're going to buy a home in a hurricane-prone area like anywhere here in Florida, having a nice, solid concrete home is definitely a huge advantage over all those stick figure homes that we saw get completely wiped out in the Fort Myers area and even in Sanibel, different places like that. These homes were not built to withstand hurricanes, and if this becomes the new norm, this could be very good for the future of housing when it comes to building really solid and safe homes in very storm-prone areas like this. So I thought it was an interesting thing to share with you guys. However, the one thing that sounds very suspect to me is, this house is going to be going for $600,000. That's basically what all of the new construction homes go for that are built utilizing traditional methods. And why isn't this cheaper if it takes far less human labor to build and it's more efficient? So to me, I think a home like this should actually be cheaper than a traditionally built home. But my guess on why that's not the case is maybe because the technology is still very new, still very expensive to use and operate and to purchase. So when it comes to new technology, it always is very expensive. Look at what big screen TVs used to cost back in the day compared to now. So maybe it will be the future. We'll see. And one other thing I wanted to cover is that in Canada, starting January 1st, is when it goes into effect their foreign buyer ban. So starting January 1st, 2023, foreign buyers are not going to be allowed to purchase real estate in Canada, and supposedly they're going to be implementing fines of up to $10,000 for anyone involved in a transaction that's attempting to sell Canadian real estate to foreign buyers. This goes for homeowners, real estate brokers, mortgage brokers, anyone who's involved in this potential transaction. And basically how this is going to look is it's going to be a 2-year ban to start. So at least until 2025, this ban's going to be in place. And after January 1st, they're going to be asking for proof of Canadian citizenship or permanent resident status from every single buyer who buys after this date. And by the way, in case you want to still sell to a foreign buyer, you have till the end of the year, guys, because any transaction that was initiated before the end of the year and closes in 2023 is going to be exempt from this. So if you're in Canada and you want to sell to a foreigner, make sure you do it before December 31st. And to be clear, this ban mostly applies to single family homes. Any building that has 3 units or more is not going to be under this restriction. So foreign buyers can still buy multifamily real estate in Canada, but similarly to the US, the biggest part of the housing crisis is not from multifamily properties, it's from the lack of affordability for the average single family home that's supposed to be used for someone to live in, not as an investment vehicle. So that's where this ban is coming from. But right now, because this hasn't actually been started yet, people are unsure of whether or not this is actually going to be more of a deterrent, a threat for people not to do this. No one really knows the level of enforcement that's going to come from this so far. So that'll be interesting to see in Canada going into next year. And I know I have, a good amount of Canadian viewers who watch the channel. So you guys need to keep me posted on how this is going after this starts in the new year. And the other reason I want to cover this and really pay close attention to this story, guys, is because this is something a lot of people have suggested that we do here in the US to help get our own housing crisis under control, start banning foreign buyers. So it'll be interesting to see how well this works out for Canada. And the city of Toronto is going to take things a step further and follow the path of San Francisco, and they are going to be implementing a vacant home tax for unoccupied homes in 2023. And basically, all homeowners in the area are going to be required to submit a declaration of their property's occupancy status for the previous year. I'm sure there's going to be a lot of lying and fraud going on with that. So definitely, guys, this is a juicy story in Canada. Please keep me posted if you live there. I know it's still too soon to really see what's going to happen from this, but this is a developing story in your country. And as somebody who is hearing from a lot of Americans that we should be doing the same things here, I'm very curious to see how this is going to pan out in your neck of the woods. If you guys enjoyed this video, make sure you hit the bell notification down below. YouTube will alert you every time I put out a new upload. And if you don't want to wait, check out my next video on the screen right over here, and I'll see you guys in the next one.